They say money makes the world go around. But here's the strange part. Money isn't real. It's a belief, a shared illusion that billions of people trust every single day. From the phone in your pocket to the skyscraper downtown, everything exists because people believe in numbers on a screen. But where did this belief start? Who decided what something is worth? And how did invisible debt, not gold or silver, become the foundation of global wealth? This is the story of how money was invented, how it changed everything, and how it quietly controls your life. Welcome to MoneyOrbit. We explore how money orbits our world. Long before coins, cards, and crypto, there was only trust. People traded directly barter. You gave me grain, I gave you meat. But barter had one fatal flaw: the double coincidence of wants. You might have wool, but I might not need it. Trade froze. Progress stalled. Humanity needed something everyone could agree had value, a universal medium of exchange. The first money wasn't paper, it was objects of trust. In some places, shells. In others, salt, cattle, or grains. But then came metal. Around 600 BC in Lydia, near modern-day Turkey, the first gold coins were minted. Each coin, stamped with the king's seal, symbolized wealth and power. It wasn't just a tool of trade anymore, it was a tool of control. As trade expanded, carrying gold became risky. Merchants began leaving gold with goldsmiths who issued paper receipts. Soon, those receipts were easier to trade than gold itself. People realized they didn't need the gold anymore. The paper was enough. That was the birth of paper money. But the game changed when goldsmiths noticed something. Not everyone came for their gold at once, so they issued more receipts than they had. That moment, fractional reserve banking changed the world forever. Governments wanted more money to fuel growth, but there wasn't enough gold to back it. So they printed more paper, tied to trust, instead of metal. Until 1971, when President Richard Nixon ended the gold standard. From that moment, money was backed by nothing tangible, just faith in government promises, fiat currency. Money stopped being a measure of value and became a tool of control. Inflation became permanent. Wages stagnated. Debt exploded. Personal, corporate, and national. In 1971, U.S. national debt was $398 billion. Today, it's over $34 trillion. Yet the system keeps running because money only exists when someone owes it. The economy grows not when we save, but when we borrow. That's not a glitch. That's how the system was designed. In 2009, Bitcoin appeared, the first decentralized money. It promised freedom from central control. But soon governments adapted. Now, they're building CBDCs, central bank digital currencies. They'll look modern, feel convenient, but behind the scenes, they'll record every move you make. Digital money isn't the end of freedom, it's the illusion of it. Today, money isn't coins or notes. It's digits, owned by banks you don't control. Inflation eats your savings. Every transaction builds your profile. The harder you work, the deeper your debt. Money was once humanity's greatest invention. Now it's our most elegant form of obedience. So what does this mean? 1. Money is not wealth. It's a symbol of trust that can be broken. 2. The financial system isn't built to make everyone rich. It's built to keep values circulating upward. 3. Control over money equals control over freedom, and that control is shifting faster than ever. The question isn't what is money anymore, it's who controls what it means. Because when the definition of value changes, so does the definition of freedom. If this opened your eyes, subscribe to MoneyOrbit.